Ladies and gentlemen, the hiatus is over and the Deacon is back. This is Real Estate Investing with Alex-Deacon. Alex, how are you doing today, good sir?
I'm doing fantastic. How are you, Adam?
I am doing well. I just wanted to say, listen, special thank you to everyone at the last meetup that I got a chance to speak with. Zay Breon, everybody else, we thank you. We appreciate your feedback on our podcast. We love the fact that you guys are listening and enjoying it. So we hope to keep entertaining you and giving you some really, really good informative broadcasts here. So, the man, Alex, let's talk about it.
Let's talk about it. What would you like to chat about today?
I think today, being the outsider looking in, I would like to know how to balance my portfolio. If I had one, like an O.J. Simpson novel. But balancing my portfolio, what would we do?
Well, I think the first thing you need to do is figure out what you want your portfolio to look like. And that's a problem that I have, and I've been doing this for quite a while, and I still struggle with that. I had a conversation with my partner Ian today, and I'm probably spreading myself too thin. Like, I was looking at doing like a small commercial building, and I was looking at Airbnb, and it's just like, I'm 51 years old now. I need to learn, because I teach this stuff, right? I teach this to people, and I don't take my own advice.
Like
I'm spreading myself too thin. I don't know what I want to be when I grow up. I don't know my limitations. You can't do that. You can't spread yourself too thin. You have to be patient. It's going to take time. You got to know what you want to be when you grow up. You have to have a goal, have focus, have some sort of idea what direction you're going in, and you can't be all things to everyone. You have to know your limitations. Dirty Harry said that in one of the movies.
You know who said that?
Man has to know his limitations.
Alfred Pennyworth says to Bruce Wayne, "Know your limits, Master Wayne.
Know your limitations." So, how do you balance your portfolio? First, you need to know, what do you want your portfolio to look like? Okay.
And with this, are you speaking, and I'm sure you're going to give us a very detailed example here, but are you speaking of not only commercial versus residential, maybe property management, maybe different neighborhoods?
Well, do you want it to, or what are you buying? Are you buying single-family homes?
Gotcha.
Are you buying multifamilies? Are you buying large chunks of vacant land? Are you doing new construction? Are you mixing it up a little bit? Are you doing flips? Are you doing new construction and commercial? And are you doing some small residential? Are you just wholesaling? So what do you want ultimately to do? I guess you have to have a final destination first. Before you know what you want your portfolio to look like, you have to look in the future on how you want your life to be. And what successes you want to achieve. You have to look down the road and work your way backwards.
It's almost reverse storytelling in a way.
Wow, this can get real deep, right? Because I don't even know how to explain to someone how to do this, because this is just all in my head. This is how I'm wired, right? But I don't listen to my own preaching, right?
Yeah, exactly.
So, do as I say, not as I do, type of thing. You tell your kids, hey, don't smoke, but then you smoke.
Right.
But this is how I do it. This is how I've learned somewhat how to balance my portfolio and where I want to be. I know right now, being how old I am and where I am in my career, right now I'm like large commercial projects, new developments. Those aren't even in my vocabulary. I shouldn't even, and I shouldn't say I don't look at them. I do look at them from time to time, but I can't focus and spend a lot of energy there because I'm so good at what I'm good at, and I should stay there. I should stay in that lane. I mean, I don't ever want to limit someone to say, hey, don't dream big and don't think big, but you got to know those limitations, man. You got to realize that 24 hours in a day, 168 hours in a week, man, you can't get it all done.
There is a balance.
There are a few select maniacs who can get it all done. And I'm definitely not one of them. So I think quality is always better than quantity. Therefore, I always have to put the brakes on because I always just want to do more.
And let me ask this question. Is it something that, because a lot of people I would imagine going with rose-colored glasses thinking, you know what, I'll be the guy that can take, or the guy or girl that can take it all down.
I can do it all.
I can do it all.
Yeah. You have to have that mentality, though.
Right.
But then again, it's like, I watch a lot of MMA fighting,
Mm-hmm.
and those fighters, they go in saying, yeah, they cannot think they're going to lose at all.
Right.
Even though they just can't have that. They can't have that thought.
I'm going to rip on my own guy right here, too, but I think there could be a thing to this. In a way, would you, and never, like you said, never limiting anybody, but would you recommend people go in with a couple different specialties, but always keeping their eyes on different things? So, like, say you wanted to go in with, like, single-family homes first, but you wanted to look at maybe, like, large land stuff later on down the line. You think that might be...
Yeah, I think so. I think that's a good point. I think you need to learn to crawl before you can walk before you can run before you can sprint. And... yes, you need to start small, but you need to know that you need to get really good at one thing. You need to get really, really good at it. And then when you can teach someone to do what you're doing and partner up with someone or hire staff that can do what you do, to open up your time so you can now branch out and learn other types of real estate investing.
So to tie it into your MMA thing, it's kind of like, don't be CM Punk and be untrained and go get your face beat in for 15 minutes.
Yeah.
Train, be knowledgeable before you get to the big show. There you go. Thank you.
Yeah, absolutely. Learn the basics, become good at one thing, and get really good at it. You don't have to be like a superstar. You don't have to be owning casinos and doing new construction and just being on the front page of the news. Mm-hmm. You can be like low-key and own thousands of little single-family homes, or hundreds of little single-family homes, or maybe 20 little single-family homes. You don't have to be big to be successful.
Right.
So the one
but
thing,
also don't limit yourself, like you said. Absolutely, don't limit yourself. Yeah.
Yeah, of course. So I mean, because I always use the analogy: would you ever tell your kid, "Oh, yeah, don't dream that. You're just going to go to school. You're going to be an accountant. Don't dream big." Would you ever tell your kid like? You can't do that.
No.
So don't ever tell yourself that. But in the meantime, you also have to know that you have to know what your limitations are. You have to be humble and you have to be like super bold and cocky, but you also have to be humble.
There's a difference between confidence and cockiness. I guess that's like they always say.
So how to balance the portfolio? Let's get it out of the psychological part of it and get into like how I do it and what I'm doing now. So I buy a lot of single-family homes. My goal was, to own a lot of them, right? Like hundreds and hundreds of them. I realized that I'm probably not going to get there. And I realized that because I just don't have enough time. I don't want to devote every waking second of my life. I mean, I just had a grandson, and I want to enjoy some of this stuff, right? So, but I'm still driven. I want to buy single-family homes. I want to buy small multifamily homes. Hey, eventually, if a large multifamily comes across my desk and it's a good deal, because those things are super hard to find, right? But they're out there. I just don't look for them enough. I would buy something like that because I know the rental market, this residential side of it. I also do so I'm good at that, right? But I'm also good. This is 25 years of doing this. I'm also good at flips because I've done sales for 23 years, so I know what the market is. I know what people like. I know what they don't like, and I know that part of it. So I mix up what I do with. I want to buy quality rental properties, whether it's a 4-unit or a duplex or a single family. I'd rather have quality versus quantity. I'm not looking essentially for cash flow. I'm looking for just quality with just small cash flow that's going to appreciate. It's just going to go up in value, no ifs, ands, or buts, and there's no way it's going to decline in value. And that's based on the Pittsburgh market is like that if you buy in good areas, right? It doesn't have the up and down of most markets. But I do a lot of flips in between. We'll probably do, because I have multiple partners, we'll do, let's say, 2 a month on average. And those flips help fund the rental properties. So the flips that we do, we do make some money on those, and they can take it out and use it for just living expenses and going on vacations and whatever. We use that as income, but I don't have to use that as income because I have other income streams. So most of the money I get from my investments, I'm putting back in. I'm not going out and buying a big home. I don't live in a big ass home that's worth $1 million. To me, that's foolish, and maybe I'm frugal, but when I have, it's just not me, man. It's just I don't need a big house.
Well, you're having your money work for you.
Yeah,
you're constantly having your money work for you.
Yep.
That's how it works.
It's not it's not about show. Let me show everybody how successful I am. I mean, I do like nice cars, the Corvette.
We have to have our toys.
But yeah, I'm all about growing my wealth and becoming absolutely. I'm to the point now where I don't have to work. I could basically just live off of my businesses and my investments comfortably. I wouldn't by no means be super wealthy, but if you just want to be financially free, then you can do it. Yeah, you don't have to be super wealthy financially, living in $1 million home. You can be financially free by just focusing and buying single families and multifamilies. But it's going to take a long time. It's not going to happen in 10 years.
Right.
There's some phenoms out there who can do it, but there's not many. I'm not one of them.
Now, how big is, because you keep going back to knowledge, and how big and important is knowledge when it comes to balancing your portfolio?
Oh, it's critical. And the only way to multiply your knowledge quickly, exponentially, is to... How do you think that is? How do you think you can multiply your knowledge exponentially? A lot quicker than you could on your own.
Oh, networking. Ask questions. Yeah. Surround yourself with intelligent people.
Exactly. So you're knowledge-based, you're learning-based, and you surround yourself with people that are smarter than you, and you pick the right partners, and you listen before you act, and that's how you propel yourself versus doing it the hard way. Because doing it the hard way is the way I did it the first 15 years. That's the way I did it, man. And I still do it the hard way. I don't know. I can't get it through my thick skull that there's an easier way. But you surround yourself with people that are smarter than you and know the business and have done it at a high level successfully. Then you take their advice. You don't take the advice of everybody, because that'll get you into trouble. So to balance my portfolio, we buy a lot of single-family homes and multifamilies. We do flips that help fund those. That helps fund my investments to ultimately give me my financial freedom that I want. And we do a lot of just buying houses at very good prices and then selling them. So we'll just buy a property. Let's just say, for example, we just bought one. Ian and I bought one for not that long ago for we bought 2 duplexes for $65,000, and we didn't do anything to one of them, and we sold it and made a nice profit.
Nice.
Did nothing to it. We kept the other one and sold this one, made a nice profit, but we'll probably keep the other one and keep it in our portfolio.
There we go.
And
will you take some of that and invest money into that then?
Yeah, exactly. So this way, it was the play, and this is the way we wanted to play it out, and that's the way it worked out. So. But that's how I balance my portfolio, which is a buy and hold, buy and sell, buy, fix up, rehab, and then flip it. And all that helps fund the ultimate, which in my opinion is just the buy and hold side of it. Because long term, that's just those like if you have 10 houses, they're just sitting there growing in value. Rents are going up. Everything's going up. Rents and value going up. I mean, expenses are going up a little bit, but not in direct relation to, okay?
Right.
So that's just like money in the bank.
Yeah.
I mean, it's work because you have to manage that and
right.
You have to know how to do that. That's another side of the business. But if you do flips, you're constantly working. You
right.
have to be involved doing flips, and it's now money, and it's taxed differently. So when you do a flip, you're paying more taxes on it as regular income versus passive income. There's a lot of tax
benefits
and such that you have to. That's why you have to have a good accountant on your team.
And it sounds like buy and hold too is like having money in the bank that's gonna grow with, obviously it's a long-term game, but it's gonna grow almost at a better rate that a bank could probably put on it. If you play your cards right.
Oh yeah, definitely. Yeah. So just a real quick example: if you buy a house that's worth $60, but you get it for $50, so you've already created $10,000 in wealth for yourself on paper, right? Because I bought it for $50, it's worth $60. Then you hold on to it for 5 years, and it goes up on average. Appreciation in Pittsburgh and Allegheny County is about 3% on average. It's higher in some areas, lower in some areas, but on average it's 3%. So $60,000 house appreciates at 3%. Let's round that up to $2,000 a year. And you own it for 5 years. Now the property is going to be worth in 5 years $70,000. Okay, and you only owe 40 on it because you paid some of it off. You see how your balance is going down, the value is going up,
yeah.
The rents are going up, your wealth is exploding, and it keeps getting bigger and bigger because 3% of a $100,000 house of appreciation is $3,000. 3% of a $50,000 house is $1,500. So as that value goes up, 3% of that value keeps getting bigger. As you pay down your mortgage, every month more goes towards the principal balance. So it just keeps growing and growing. And now, after 10 or 15 years of owning some houses, you look at your balance sheet and you're like, holy crap, it's finally paying off. Yeah. I'm worth X amount of dollars. Even though I don't have it in the bank, that's what I'm worth. And that's where I am finally at my career, is I can start cashing out and paying some bills off, and it's a beautiful thing, but it's taken a long time.
Were you ever in a spot where you thought you didn't have the patience for it? Because I think that's probably where people fall out of the game, is that they lose the patience or they don't see the long game.
Hundreds of times.
And what kept you?
I've probably had just my tenacity, I guess, my stupidity. I don't know what you want to call it. Yeah, you just have to have a stick-to-itiveness, because it's difficult.
Just see the light at the end of the tunnel and keep reaching for it.
Absolutely. Every look at everything in a positive light. Don't look at everything like everything's going to be fine and just walk through life numb. But what I'm saying is, if there's always a negative, but you got to turn that negative into a positive.
And it sounds like and from what I took it from this, and and guys, you guys all know I'm not an investor. I'm just kind of like I'm the fodder here. I'm the media guy. But it sounds like too, like we said, making your money work for you. I mean, let's follow the pattern here, guys. We're getting not only the single family multi-unit homes, but we're also getting flips. But we're using those. We're investing the money right back into other properties, so that then you can not only raise the rent on those properties. So not only is the prices are going up anyway because of maybe the market's going up, but now you're making the right additions. Maybe you're making the right repairs that you can also raise the rent. Your money is constantly working for you guys. So that's at least what I'm taking for it.
Yeah, absolutely. You want to put your money to work and your investments to work. So I guess in a nutshell, we talked about how I balance my portfolio, buy and hold. I'm constantly selling too, like buy and holds. I just sold 2 this week. I sold a flip this week, and I sold a buy and hold that I had owned for like 5 years. It was just time. I said, I don't want that property. I don't like that area. I don't see that area going up in value anytime soon. I got a good price on it. I'm going to take that $20,000 in equity and put it somewhere else. Okay. So you're constantly, your portfolio is constantly evolving and changing.
Gotcha.
All right, my man.
Very good. What else? Is that it for today, Alex?
That's it, my brother.
Nice. Guys, thank you so much. We apologize for the hiatus. Summertime, it's been busy, but we are back, and we hope that we are better than ever. We thank everyone that listens to these. Guys, if you're looking for these, spread the word. You can just search Alex Deacon Podcast in Google. It'll take you right to our iTunes link. We're also on Google Play Podcasts. Look for us there. Spreaker, looked like Last FM had us on there too. So there's a lot of podcasting services out there where you can find us. Make sure you're checking out dhrea.com. Under the news and updates, we have a lot of blogs. We have all of these broadcasts. We have listings, updates, all kinds of stuff going on our personal website. Check out our Facebook page, our Twitter account, at Deacon Hoover with both of those. Guys, we are back, and you'll be getting this once again about 2 to 3 times a week. So we look forward to bringing these to you again. For Alex and for everyone else here at Deacon Hoover Real Estate, we thank you, and we will see you next time.
Yeah.